Welcome to the Maryland Mortgage Rate Weekly Mortgage Market Update for the week of August 11, 2014. Hello, I'm John Thomas with Primary Residential Mortgage, here to give you your update. Well, last week was definitely volatility in the market. Maryland mortgage rates ended the week near the lows for the year, but the mortgage bonds were turned lower on Friday as the stock market mounted a late-day rally. So geopolitical news has dominated headlines last week, sent the market on a wild ride. If you take a look at the bond chart on the screen, you can see the green candle, red candle, red candle, green candle, red candle. New bond all over the place because we've had crazy news this week. Tensions in the Ukraine, war in Gaza, war in Iraq caused the market to have extreme volatility. So what we're looking at from this chart is we still had an upward trend, but we hit that ceiling of resistance. It's been a tough ceiling to break right there, the line R2. We haven't been able to break above that. We returned lower on Friday as the stock market rallied, so that is a bearish sign. That means mortgage bonds will probably can sell off next week, move mortgage rates higher. So we're going to recommend locking your Maryland mortgage rate to start the week to take advantage of these record low rates, as we do feel the bond is overbought now and will sold off in the short term. And we're going to have to watch that geopolitical news because that could turn everything on its ear. If talks break down with Russia over Ukraine and they invade, that's going to throw the stock market for a while, put money back into the bonds. What's going on in Iraq, what's going on in Gaza, a lot of geopolitical events that can just trump these technicals. But for right now, lock your Maryland mortgage rate. Now in economic news, we had the weekly initial jobless claims come out on Thursday, came out really good. Dropped 14,000 claims from the previous week to 289,000 claims. Jobless claims are now at an 8-year low as the labor market improves, and the 4-week average dropped to 293,000 claims. Now, jobless claims are what we call a leading indicator of the labor market. So they drop first, and then jobs picks up. So if this is an indication, we should have a better than expected August jobs report, so we're going to look out for that. And then inflation was rearing its head earlier in the year, and that was a big concern for the Feds, fearing they may have to raise the short-term funds rate quicker than they anticipated. But latest news on the inflation is that it is moderated. The Fed's favorite measure of inflation is the PCE, and that showed inflation moderated year-over-year basis, and it remains below the Fed's target rate of 2%. It's about 1.6% in June. And then the unemployment rate is remaining above the target rate of between 5.2 and 5.5%, interest rate at 6.2%. So that gives the Fed's reason to keep short-term interest rates low throughout 2015. That means it's going to keep stimulating the economy, so that's good news there in the short term. And then housing news, CoreLogic came out with a report on home prices increased 7.5% from June 2013 to June 2014. That's a good number, down from May from 2013 to May 2014 is 8.3%, so on a national level we dropped down to 7.5%. So the national housing market is cooling off as inventory rises and demand wanes. So CoreLogic predicted home prices on a national average to go up 5.7% from June 2014 to June 2015. Now you got to translate that into the local market, and Maryland has a bunch of different markets. For example, Frederick is following the national trend. Frederick, Maryland, inventory is up. Demand has waned, so price appreciation is dropping. Still appreciating, but not at the crazy levels of 2013. Now you go other areas, Clinton, Laurel area, still a hot market, still low inventory, still a lot of price pressure on the homes. So that has not started cooling yet. So depending on where you buy is going to determine whether these national statistics apply to you. So you've got to look at your local market and see what's going on. If you need some advice, let us know. We can get you some local advice. Now, in the local news, the next free first-time homebuyer seminar is coming up this Wednesday, August 20th from 6 to 8 p.m. in Laurel, Maryland. And then the next one in Towson is August 30th, and that's on a Saturday, and that's from 10 a.m. to noon, and that's at the Sheraton Baltimore North Hotel right there on Delaney Road. And then the next one in Frederick is Saturday, September 13th from 10 a.m. to noon at the Holiday Inn. Now you can register for either one of those events by giving us a call in the office at 410-412-3319 or online, www.marylandhomebuyerseminars.com. Look forward to seeing you guys next week.